Curious about whether to invest in Bitcoin or the ETF before the 2024 halving? Dive into the inner workings of Bitcoin's supply mechanism with Finance Animated. Before we explore Bitcoin halvings, it's important to note that I'm not a financial expert. Always seek advice from professionals when making financial decisions. Our journey begins with the first Bitcoin halving in November 2012. During this event, the reward for those maintaining the system was reduced from 50 to 25 Bitcoins. And guess what? Bitcoin's price rocketing. If you'd invested $100 at that time, you'd be sitting pretty in the front row. In the second halving, which happened in July 2016, the reward was reduced once again, this time to 12.5 Bitcoins. Similar to the first halving, Bitcoin's price experienced significant growth. If you had invested $1,000 during this event, your investment would have seen substantial gains. The most recent halving occurred in May 2020, lowering the reward to 6.25 Bitcoins. Bitcoin halvings have historically led to price increases, but it's important to remember that having a long-term perspective is key. If you had invested $10,000 at that time, you would have seen notable returns. While past performance is not indicative of future results, it's clear that Bitcoin halvings have historically impacted the market positively. However, it's essential to remember that investing in cryptocurrencies carries risks. Do your research, have a solid strategy, and consider your financial goals. Now, let's discuss what happens when people invest in Bitcoin during a period of high excitement. Imagine Bitcoin making headlines and reaching new heights, and everyone wants in. This phenomenon is often referred to as FOMO, or fear of missing out. During these times, some individuals tend to go all in, putting all their money into Bitcoin, hoping for quick riches. However, after the excitement peaks, Bitcoin's price can often drop significantly, leaving many investors disappointed. These experiences teach us valuable lessons. It's essential to have a well-thought-out plan, set realistic goals, and understand the risks associated with investing in cryptocurrencies. Investing in Bitcoin during the hype peak can be challenging, so remember to conduct thorough research, develop a solid strategy, and, of course, always remain cautious. Share your thoughts and questions in the comments. Is Bitcoin the biggest scam of the 21st century, or are you excited about the next Bitcoin halving? If you'd like to continue exploring this world of finance, consider subscribing and inviting your friends to join the conversation. We're here to provide insights and knowledge. And for those curious about where would $100 invested 25 years ago be today? Check out our dedicated video.